Hello, I'm Tom Ferguson and welcome to The Fundamental Molecule. This show explores the intersection of water, technology, and entrepreneurship. Each week, I interview innovators, experts, entrepreneurs, and investors in the world of water, helping us understand where this trillion-dollar industry is headed. These are the stories of the people building the future of the world's most valuable and fundamental resource.
Disclaimer. Tom Ferguson is the managing partner of Virgin Island Ventures. All opinions expressed by Tom and podcast guests are solely their own opinions and do not reflect the opinions of Virgin Island Ventures. This podcast is for informational purposes only and should not be viewed as investment advice or relied upon as a basis for investment decisions.
Over the last decade, I've been so lucky to learn from seriously good water people. And Debra Coy is one of the best. Over 4 decades, she has built an extraordinary body of work, from public markets analyst to XPV, the preeminent water investing firm that has been extraordinarily supportive to us, to her current independent role advising and sitting on the boards of major water companies. She sits on the investment committee of our Opportunity Fund, and it has been such a pleasure to benefit from her insight and wisdom as we have made our first 2 investments at the Series B. This is a really fun conversation. Everything from the lessons for founders from earnings transcripts to lending her perspective on the overall history of private markets investing in water. Please enjoy my conversation with Debra Coy. Debra, welcome. It is always an absolutely huge pleasure to see you. How are you?
I'm good. Good to see you too.
Very good. Now, I think this is going to be an interesting conversation because to a large extent, you used to do the game that we at VIV are doing. Certainly, you've been part of an investment firm within water for certainly much longer than I have. And I think my first question to you is, over those 14 years, what do you think has changed about investing in the water world?
Well, first, for me, it's been more than 14 years. More.
Indeed.
It's been more like 20-something. Probably closer to 30 at this point.
Sorry, it was a 14-year career at XPV.
Years.
I apologize.
I joined XPV as an
That's
advisor.
my bad.
Yeah. Mm-hmm. I have watched this for a long time, and I think what is different is that it used to be considered a very obscure sector. It used to be, I'm sure I've said this to you before, that I used to be asked all the time, why don't you follow a real industry? Nobody really saw the water sector as an actual industry. It was just this kind of amorphous policy thing and not an actual industry to invest in. And I think that's what's really changed, is that the investment world has finally woken up to the fact that this is actually an investable sector. It's still big and broad and has lots of different pieces to it. But I mean, that's true of tech, that's true of healthcare, that's true of utilities. So
exactly,
water's finally becoming a real industry. So no.
So when you say trigger, are you talking more about late stage capital or mid stage capital? Are you talking private equity? Like, to say a little bit more about this.
I would actually say that that's been true across the whole range of the capital stack. That it was certainly true for me originally on public equity. That's what I did. I researched and recommended related to the water sector. And there was a relatively smaller number of them. And frankly, there's still a relatively smaller number of them compared to other sectors, but they were mostly small. And so people felt that that was true at the publicly traded level. But they also thought it was true at the private equity level because there was smaller deal flow, not as many assets around, very fragmented. But then you would have thought that at the lower middle market level, that fragmented asset base would have been attractive, but it was so fragmented and so few assets in the hands of professional investors that it was still not seen very investable at that sector. And if anything, all of this was even more true at the early stage, because on top of fragmentation, there was this view that the gestation period for companies in the early stage was so extraordinarily long and painful and expensive that not very many investors even wanted to look at it.
Yeah. No, it's one of those things. There's the sort of the really excellent Paul O'Callaghan in his sort of piece of analysis is it said that the average time for the newer technology to be accepted by the market, if you kind of just do the backwards looking calculations, it's 14 years.
Yes. And that was all built around treatment technologies. That was how people thought about this sector. They thought about water and wastewater treatment primarily, and filtration, and other related types of technologies. And when you think about the market for where those were going, mostly it was in the municipal markets, which I actually think this has changed too, but they were notoriously slow to adopt new things. And so that 14 years was true, or mostly true. But I think a couple of things have changed. I think one is that the definition of technology that gets adopted in the sector has changed, and digital has a much faster adoption rate. Anything related to the whole digital part of it has a faster adoption rate than some of those treatment technologies. And honestly, I think that perhaps for a lot of utilities, as well as also industrial customers, that maybe learning about how more rapid adoption of some of the digital tech and how that could have a positive impact may have made them more open to faster adoption of other types of more, shall we say, hard technologies, or, core treatment and management and transmission, so process technologies. So that I actually do think that the adoption cycle has speeded up. And probably it's been, more technologies have come to market, and engineering companies, which always were the biggest foot draggers of any of the parts of the cycle, have taken a more open view. So I think that overall, the market adopts technologies faster than it used to across the different end markets.
How do you think about the role of the quality of the entrepreneur in accelerating that cycle?
Oh my gosh, it's critical. It's absolutely core. If there's a number one thing, it's the quality of the entrepreneur. And I think that's probably one thing that has changed too. From what I have seen, there was always a lot of, not to denigrate mad professors, but there was a lot of mad professors introducing technologies into the water business for my entire career. And they had interesting and sometimes very good ideas, but they hadn't the background or the training, or frankly, even often the interest in the business side of it. And so it was hard for these things to actually take hold and be built into a real business or a real company. And I think that's what's really changed. We're seeing some, you know this better than anyone, we're seeing these bright, young, super business focused entrepreneurs coming into the sector and putting those pieces together, because it can't just be about having a great technology. It has to be knowing how to bring it to market and how to make it profitable.
Exactly. I couldn't agree more. One of the things I found most interesting about the overall analysis that brought out this sort of 14-year number is it did not control for the quality of the entrepreneur. And not controlling for your sort of biggest influence, I thought, was something that would be really interesting to rerun the numbers, like almost in cohort analyses.
And to rerun it more, more currently, maybe.
Yeah, exactly. Even though, obviously the proof is not quite yet in the pudding.
No, that's true too.
Yeah.
Oh, I was going to say that we're still in process on that, right?
Yeah, exactly. Our DPI is still flat. Curse it. Like, hopefully not for too much longer. But yeah, things are looking good. But the overall quality of entrepreneurs really is night and day. To sort of stick on this theme of what's changed, I'd love you to take you back to the start of your time with XPV. Just give us a little bit of context on XPV. We're hoping to have Dave on this show at a future date. So it'd be really interesting to, hear it together. But to the beginning of your time with them, what were your expectations? What manifested? And then maybe what do you think were the determinants of what manifested? I'd just love to get a feeling for that arc in the early days of your time there.
It is interesting to think back, and that was the 14 years or so ago. Those guys found me. They had one of the three original partners had a water background, John Coburn from Xenon. The other two came from more tech and telecommunications, and they'd had this idea of doing something in water. And I was a research analyst and running a conference and had a lot of visibility in the sector at the time. So they came and found me and asked me to be an advisor to the early fund. They raised $250 million, started putting it to work with a focus on technology. As it turned out, mostly on earlier stage technologies. Nothing was pre-revenue, but they were small and they were breaking into the market for the most part across the some variations, but that was mostly the kind of thing they were looking at across Fund 1. They soon found that, as we've already discussed, that the adoption cycle was slower than they had been used to, especially in the tech telecom space. And that also it's more politically complex, as we all know about the water sector. There's a lot of politics. It's not just about what the consumer thinks, it's about all these levels of government and organizations and what they think. So it led them to become hyper-focused on the entrepreneur, on profitability and scalability. How could this company actually grow? And I think what you would hear from Dave and the others is that they've developed a very hardcore focus on gross margins, on the theory that everything else flows from that. As the firm developed, they became more clear in some of the screens, if you will, for investments that they would look at. But they also became far, far more knowledgeable about how the sector actually worked and all the different pieces of it. They ended up becoming a true specialty investor like Burr Island, but they didn't start out. They started out with the idea of doing that and then realized how hard it was and then really went out and did the work to learn it, including bringing in people like me who had a long background in water and, other advisors to help them go deeper into the sector. I think they learned a lot. They learned a lot about what matters in terms of making a company successful, and that very, very clearly having a great technology is far from a recipe for becoming a. And so putting those pieces together on pricing, operating efficiency, leadership, quality of your sales channels, all of those pieces, putting all of that together to actually make a successful company. They developed into being quite a hands-on supporter of their companies. They have a whole group of people that works on operational support. And, they really help the companies, like I say, become a real company.
Yeah, especially from a position of equity control. This isn't a minority position in the classic venture sense.
They can speak to it better than I, because you and those listening should be aware that I did leave that partnership a few years ago, and I'm back being an advisor to XTV. And so I'm not involved in the day-to-day operation there any longer, but they do have a mandate that allows them to be a minority investor as well as a majority investor. I think they have found that it's more effective when you have a closer relationship with the CEO and can really help them where they need help.
Yeah, no question.
They have called themselves XPV. In fact, when I first joined, they were called XPV Capital. And the XPV stood for something Dave could tell you, but I've forgotten what it stood for.
You're lost in the sands of time. Yeah.
But they did change the name several years ago to be XPV Water Partners. That was purposeful with this idea of being in a partnership with the companies that you're invested in.
It's such an important touchstone for us. And David's always been kind of enormously generous. And so have you and John and the rest of the partnership. I'm just curious, with the kind of the straight up venture part of it, because not naming any names, there were other funds that struggled in the period of, when I first arrived at Imagine H2O in 2015, they'd kind of been established at maybe at about sort of like anywhere between 2010 to 2013. Other people were tilting at the kind of the early stage sort of seed fund venture windmill. And everybody had a bit of a tough time of it. And even people who were doing late stage, like Silver Lake and various others. Do you think structurally the conditions were there for anybody to really get it right?
I think it was tough for anybody back then because there wasn't the critical mass, if you will, of investors and investment to understand it. Silver Lake, for example, really smart tech investor that didn't know water.
Yeah.
That was kind of a common theme for the people that were looking at it because most of the early stage was coming from Silicon Valley tech world and not really getting this whole government policy overlay. The rise of GovTech across early stage has helped. I think that there's a lot of investors who understand the space better and some of the interaction too with climate tech in terms of the big picture drivers. I think that we are now having a more critical mass of investors who kind of understand the pieces of this puzzle that impacts water. that we didn't have before. And it takes more than one, right? You can't just do it by yourself in a vacuum. It takes a range of support across the investor base, but also then kind of pushing into enough places so that people get used to how to do pilot and how to share data and how to develop databases and how to educate the industry about the potential for new sensors or whatever it is. The machine, if you will, is starting to, I think we have a ways to go, but I feel like the machine is starting to work. You're starting to see those cogs move so that pieces can build on each other to actually make a more viable investing environment for early stage.
It's really interesting because there are both sides of it, right? There's the question I was going to ask, which we'll start with, is I hadn't really thought about this as our contention has been one of the big reasons why water doesn't receive more investment is there isn't in anybody's circle of competence. There's kind of one investment professional, Earl Jones at DCVC, and that's it. There isn't a real water person in any other fund. Now, other than the water specialists, right, obviously. Do you agree with that? Because I hadn't really thought about it in terms of the schools of experience. Actually, GovTech is very helpful. Infrastructure is helpful. A lot of the hard tech within climate tech also quite helpful as long as you don't learn the wrong lessons and then try and apply them into water. So you think we're closer than...
I think we are. Because there's different people in different places that have been in and out of some bits and pieces of water or some related things or like done some investment, like whether it's even some of the stuff that's a little later stage, like people like New Mountain Capital are spending more time on this. And then that sort of feeds down into the what things, just like, what XPV has been a big friend, I would say, to the early stage industry because a bunch of their portfolio companies have bought smaller, earlier stage companies. Axius Water, where I'm on the board, which is now also KKR backed, made like 7 acquisitions of smaller companies, and maybe they weren't seed stage or early stage, but definitely smaller technology driven companies and technology and services. I think that it flows down, right? Because those especially the middle market firms that are focused on growth as opposed to purely cash flow are mostly looking to be an M&A machine. And so they're out there looking for nurturing, supporting and acquiring smaller companies. And then that helps build the infrastructure across that lower stage, I think, as well.
Absolutely. I want to talk about Axius in just a second. One of the things that is just triggering on from what you've just said is the importance of the talent recycling. I think one of the things that like water has been really difficult to develop is that so few people have been part of companies that have been built brilliant. That they take that from their role in kind of the marketing or the sales or the BD or the customer success or like whatever it is, or even the finance element, and then take that into their next experience. There have been isolated examples of it, and we're very lucky that, a couple of the CEOs work with us, including Christine, who's a partner here. But there's going to be really interesting things as we see this explosion of talent and people who are building really good companies. The people from within those companies will then go out into the broader world. Do you ever think about that as you think about the prognosis?
Absolutely. I think that's true for sure, that once they get and this is, again, happened in other sectors, and now it's starting to happen in the water sector, where people have been through a few startups or been through a few exits, or at least one or two, and it's fun and exciting. They come back. Axius is a perfect example. Our CEO, Chris McIntyre, was at Nova when it was, sold to Xylem, which was, the core of their whole sensor analytics business. And then Chris was at another sensor company. And so he's been through this. He's also on the board of another XPV investment. At this point, he's a highly experienced build, grow, sell CEO. There's another one at XPV that I actually had brought to them from my days as a public equity analyst. Got the name of Tom Vossman, who used to be at Insituform, and then he came to XPV and he ran Nuterra. Nuterra was sold, then he ran Holland Pump, and now Holland Pump has been sold, and we'll see what happens next.
Exactly. What's next on the block?
Another example of an experienced and successful. And I think for those guys, and starting to be some women, I would like to see more, but when you've done that a couple of times and it's been fun and successful, and you've learned the sector as well as learning how to build and grow and sell a company, that I think they want to do it again because it's fun.
Yeah. Exactly, especially if you found partners that you like working with, which absolutely XPV are. Just walk us through the Axius story and talk maybe a little bit about how you thought about executing that strategy from your position on the board. And anything that you can say about your relationship with obviously one of the premier capital providers of this and any other time of KKR. How has that kind of come together? How has it worked?
Speaking of fun, that has been fun, actually. I joined of course, I was familiar with the predecessor companies that formed the basis of Axius when I was still at XPV. It was a couple of wastewater treatment companies, EOSI and Nexum. XPV invested in those two companies. It became clear that there was some synergy, some potential operational synergy between those two companies in terms of the markets that they were selling into, the solutions that they were providing. So XPV brought them together and then sold the platform to KKR as part of their Global Impact Fund. It was KKR's Global Impact's first significant water investment, and then XPV stayed on as an investor as well. And I joined the board after KKR invested in that platform with the clear intent that they would continue to build it and grow it into being a wastewater treatment solutions provider with a focus on nutrient management. It was a matter of building a theme to put it together and then have the strategy and the vision to figure out what pieces to continue to build across the technology portfolio, the services portfolio, and also then begin to move more internationally. They acquired a company in the UK that serves the UK utilities as well as the ones that they had in the US. And we most recently acquired an Italian filtration company. It's very much a portfolio approach, but a very focused one where it all builds around the utility's ability to control nutrient pollution, which we think is a primary driver in growth in wastewater treatment in the US and Europe in particular.
Us too. Absolutely fascinating. And then the other company which is in a slightly different area, is Ares. Can you tell us a bit about their functionality and perhaps we can get into a bit of chat about one of the big overlooked water stories out there, which is the interaction with water and oil and gas in the Permian. But Ares first.
Yes, I joined the board of Ares Water when it went public a little over 3 years ago in October of 2021, when they did their IPO spin out of a oil field services company. And what Ares does, as you referred to, is water treatment and recycling in the Permian Basin. And it is interesting because the entire time I was at XPV, we looked at a few, but refused to ever invest in any company that worked in the oil and gas industry. Well, that's not quite true. We did have an early investment in a company that worked in oil and gas, water management, but not in the Permian Basin, and any of the others that we looked at couldn't see our way clear to invest in because of the cyclicality and complexity of the business. And frankly, the stage at which it was in, which was, if we think that water treatment and services in the municipal sector is fragmented and not terribly mature, then wow, take a look at the Permian Basin.
Sure.
That is the Wild West if I ever saw it. It's really unlike any other industry that I've been involved in, but it's been so fascinating to watch. So now it's 3 years later, and what has changed in those 3 years is that the oil companies, particularly the majors, who've chosen to stay in the Permian because it's the most productive rock that you can frack oil or gas from across the entire U.S., they've come to realize that water is actually a limiting factor for that business. Not only does it take water to frack, but then you bring up 2, 3, sometimes 4 times as much water as you do oil or gas, and then that has to be disposed of or treated or recycled or some combination thereof. You know this because of one of your investments is looking at that space as well.
Yeah, the good folks in Aquafortis. Yeah.
Aquafortis, that it's become clear that disposing of this produced water in disposal wells is causing earthquakes. And more recently, not only there starts to be disposal wells that are shut in because of earthquake, and then more recently, what we're also seeing is that the geological space is so tight that you're seeing wells blow out. And so they're having these unexpected geysers of produced water that are just blowing up out there in the field. You can start to read some of the transcripts of the earnings calls of some of the bigger companies. They're starting to talk about water as one of their significant risks, which they never did before. I mean, they always knew that there was a lot of water involved, but they had all these scrappy little operators out there taking care of it for them. So they just pushed the liability straight off to the little midstream operators managing water and ignored it. Now they can no longer ignore it. So we're seeing investment in infrastructure to take and manage the water. And we're seeing a big investment in technology to recycle the water. We are already recycling it back into fracs, but now we're talking about recycling it at a higher level so that you can use it to recharge aquifers, so that you can use it to replenish like the Pecos River on the Texas-New Mexico border, looking at potentially using it for range grasses that can help with carbon capture. There's a whole range of things they're looking at recycling produced water for. And it's finally, again, just like other parts of water, it's finally turning into a real industry. And Aris has been working at the forefront of some of this. And all the other thing that they're working on besides recycle is capturing different usable components from the brine or the permeate, whether it's lithium or iodine or magnesium and a few other things. So we're doing research on that as well, starting to see some economic opportunities around that. And this is one of the things I love about the public markets is after having these stocks work in the midstream water had been trading at 4, 5, 6, maybe 7 times EBITDA versus everything else in water trades at least twice that level on the public market. But my own company, Aris Water, where I'm on the board, the stock is up 150% this year.
That's awesome.
Partly based on good performance, but partly also just based on investors starting to understand that there's real opportunity in this. So it's interesting times down in the Permian. We'll see how it all shakes out, but
it certainly is.
There's suddenly a lot of interest and research going into solving this challenge.
Yeah, there are things rumbling down there and not all of them are welcome. Anybody who has not seen a well becoming uncapped at rapid speed, definitely go on YouTube because it is quite extraordinary. And that stuff that is blowing up into the air is not nice. It is things that you do not want out in the...
It's not pleasant stuff.
It is not pleasant stuff. I'm so glad you took us to the public markets. What reflections do you have about the public markets that you think entrepreneurs who aspire to get big or mature enough should bear in mind?
I grew up in the public market. I left to do private markets, and now I have a bit of a foot on both. The thing that's interesting about the public markets is that you do get this constant report card. Every single day, the stock market is giving you a report card about what investors think. And it's not perfect because, there's all kinds of computer bots out there trading as well as real people. But it basically is giving you a view. Even the computers are trained on real people's opinion. It's giving you a view of investor sentiment in real time. And I found when I was gone that I missed that because it's very educational. And I think that overall, particularly when you start to aggregate them across, the many investors that are involved in public companies, investors are really smart and they're not always right, but they often have a good sense of what's going on and they also look ahead. So stocks are always trading on what people expect is going to happen. They do trade on what just happened. We just had a terrible quarter and the stock trades down, but then they're always looking ahead at what happens next. They're also, public company investors are just like everybody else, emotional. You get attached or angry with, your companies and you're too emotional and not able to be rational, even if you're smart about looking ahead. And I think that is a real lesson for all companies to learn and investors to learn is that you just can't be too emotional about this stuff. You have to take a step back and look at reality. I think investors and obviously company entrepreneurs are investors in their own companies that you can get so attached to what you're doing that you're unwilling to let go of what's not working, unwilling to just be rational about what you need to do and take a harder look at what that might require. And that's probably one of the things that you get disabused of pretty quickly in the public markets because the stock market tells you, and then the board fires the CEO, and it can be fairly brutal. And activist investors are always in there to speed up the process.
Humming around the place.
I think it's we talk about this in early stage investing too, about fail fast, fail forward. But the truth is that when you have a 7-year runway in the fund, there is really not as much motivation to move fast to do what needs to be done. And that's one of the things I think that the public markets have taught me, that you can't just sit around and wait for it to get better. You have to do what it's going to take to make it better.
That's really interesting. Do you think entrepreneurs should read more public market company transcripts of earnings calls?
Absolutely. That's actually it's a good, simple little piece of advice. I find, and I still do it, I don't have to do it anymore. I used to have to do it for a lot of companies. And now I listen to my own company's investor conference calls, but I still do go and read transcripts across the sector, because anybody who's publicly traded that's related either as a customer or a competitor, or you aspire to be acquired by, a partner, anybody who's related to your business as an entrepreneur, absolutely. If you can read their transcript, you're likely to learn a lot, because they're bigger companies. They have their fingers in a lot of pies. You hear interesting questions from the investors who get on to the conference calls.
Yeah, what do they think about?
Particularly for the bigger companies. And also, these companies are, by SEC requirements, expected to be quite transparent about their financial performance, but they're often telling you a lot of interesting details about their operational performance as well. You can be absolutely sure. For example, we at Axius, since we're in the wastewater treatment business, we listen religiously to everything Xylem has to say about the markets, because, they're giving us a sense about growth. They're giving us a sense about what customers are doing. They're giving us a sense about, just what's happening in the market. So yeah, I think it's very helpful.
That's really interesting. And very embarrassingly, it's not something I'd ever thought about before, but I have now. So there is a certain amount of, there's some pretty happy expectations around some of the public markets tickets around there, but there's also kind of a lack of them, right? This isn't it's not as if when you sort of build a water index, you've got like a gazillion different tickers that you would be able to put into it. What's your read on the public market sentiment around water? Would you lump it into what you said at the beginning, that this is it's just another part of the capital markets that's starting to get water? How do you think water is seen? Or do you think it's actually, you could just break it down company by company and there isn't any overall observation that you can make?
Well, it is still a little fragmented. We only have a very small handful of larger companies, Veolia, Xylem, Pentair. There's just not a huge sector like there is in some other industries. And then those are thought of differently. There's another 6 or 7 or 8 investor-owned utilities, but that's a small segment of the utility market, the water utility market. And then there's a few other smaller specialty companies like Energy Recovery, on special equipment for desalination, energy efficiency, and a few other industries. There's a few different pieces of this. We mentioned my company in the Permian Basin. I think the publicly traded stocks are still fragmented and differentiated enough that they certainly don't trade as a group. They, like the water utilities, have been trading like electric utilities, not like water stocks.
Right.
With interest rate going up, and now interest rates starting to go down, so the utilities are behaving a little better. So you kind of have to look at the subsegments within the water sector, but overall, the stocks across the water space, with the exception of those probably in the oil and gas business, which are mostly still less well understood, but across the water space, the sector has been discovered. There are more stocks that are in more indexes, and not just water indexes, but other
beyond, yeah.
Sustainability was one of the drivers too, that these companies became a focus when sustainability funds started being put together. There was always some water participation. Even though sustainability is out of favor right now, it seems to have taken on a life of its own, where investors still believe in sustainability, even if certain segments of the political gathering class.
No, sure, because, faster, better, cheaper.
That's been a supporter for water valuations also. So I think there's just this view that water's a bigger risk to the economy, to industries, ranging from insurance to semiconductors to manufacturing to energy, that people are starting to get this idea that water is a risk, and therefore companies that have solutions are likely to benefit over the long term. So that's been a valuation supporter across most of the sector.
Thesis we share. Look at that. What on public markets? You got there in the end. So I've just been thinking, you hold this rarefied position where you work with entrepreneurs and business leaders across public markets, but also significant and very different range of strategies in the private markets as well, from kind of like straightforward early stage companies to now relatively significant roll-ups with substantial financial capital partners. When you think about the leaders of those companies, what do you think the best leaders have in common?
I think the best leaders have the ability to inspire. I call it storytelling. They can tell the story that makes people excited, both externally and internally, about where this company is going to go, what our position is in the market, how we can build. I always thought this was true as a public company analyst, that the CEO needed to be able to tell the story to investors, and that a good story will get you a couple of turns on valuation, as opposed to a good performer, but a bad storyteller.
So interesting.
And that's probably slightly exaggerated, but not a lot. I think that investors, as I said, they tend to be emotional. They want to invest in what they believe in. And I think people want to work for a company that they believe in. I think that's the CEO's number one job, is to be inspirational and be able to articulate the case. And then it's also, as I said earlier too, it's being able to make hard decisions and let go of people, things, processes, segments of the company, whatever it is that aren't working, to drive it forward.
That's really helpful. And I've been mulling over to whether or not this is going to be a penultimate question. And I actually only bring it up. I'm not a huge fan of women being asked women-centric questions, because it sort of seems like it's ridiculous. Why the hell are we bringing this up? We should be asking the men. Everyone should be asking the same questions.
What I would like to see you do is ask more men women-centric questions.
Exactly. But the reason I bring it up is because you brought it up earlier, and we skated past it, and I'd actually like to spend a bit of time on it because it hasn't come up on any of our 20 episodes, which is I need to fix, and we need to think about it more. But it's also not just women, it's also other parts of the demographics that are underrepresented within water. You mentioned that you would like to get more women involved in water. What would your recommendation be for me, for other people who are building companies within water, like whatever it would be? I mean, obviously, hire them. The hire people say it's not straightforward, but
that is a lot of it, is to make a more concerted effort to bring women into leadership and then support them as they're moving up through the leadership ranks. I believe strongly that a diverse leadership team is a better leadership team. And as you said, it's not just gender diversity. There's other kinds of diversity as well. The water industry in particular tends to be extremely insular. And we've always done things a certain way. And this is our crowd, and this is our club, and this is our team. We need to be bringing in people from outside the sector that have experience in growing companies. We need to be bringing in people that come from different backgrounds that might reflect our targeted customers. This is why we do tend to see women and minorities running utilities in urban areas, because that's so much of their customer base. But for the most part, when you look at the people that service the water sector, it's still mostly white guys. And it's just not realistic. And I don't think it's ultimately the most successful over time. My CEO in Houston with the energy company is a woman. She's one of the most visionary people I know.
She's amazing.
And she also has had to learn to have sharp elbows, being the only woman in the room with all those big egos in Texas. She has been for so many years. But I think that bringing those different thought processes in is so critical. And I'm sick of hearing it. I'm sorry to say, well, no women applied, so all the candidates were men. I'm like, really? Then that means your recruiting process sucks. I think it is going to take a more concerted effort to reach out, because, private equity is the worst of all the groups that we've talked about. But if you open up the website of the firm and everybody up there looks the same, do you want to apply? Because it's not that much fun to be the only person like you in the room. I think that we have a lot of work to do around this. And frankly, I give this lecture more and more to every company I work with. I'm like, I don't want to hear these excuses about how, well, we tried, but we didn't really get any candidates. So I think it just takes work. I fundamentally believe this is not about checking a box. This is not about just being politically correct as it used to be. And now it's not even politically correct. This is about better performance.
Absolutely.
That's what this is about.
It's not a coincidence that VIV is 33%. This is, Steve and I are running to keep up. I think we can both agree on that. Thank you, Debra. I really, really appreciate it. We've come to our final question that we ask all of our guests. What is the most important piece of advice you have for current and future water entrepreneurs?
You asked that question, and I've listened to some of your other guests, and I did think about it. And what I thought of this time was that I think the biggest thing you can do as an entrepreneur is learn how to balance thinking big, but also doing small, because it's easy to get in the weeds with all the little stuff you're doing and forget about your big picture, big vision, big goal, big dreams. But you can also be up here in the clouds and not be doing something that's actually executable. So thinking big, but also balancing that, learning how to, where's the right place on that balance to actually execute the strategy. If you can figure that out, you're going to be successful. I'm not saying it's easy, but if you can do it, big stuff can happen.
Yes, I couldn't agree with that more. Thank you. And I also think we might have just found the title for the episode, which is nice. That's really wonderful. Debra, thank you so much for being here. It's always a pleasure. I knew this would be a great one, and that it was. We'll see you soon. Thanks again.
Thanks, guys. That was fun.
All right. Cheers.
Bye.